All right, welcome back to the show with me, Shifa, and also Gladys Felicia. Maybe Gladys may introduce yourself first.
Okay, Jipa. Hi, so I'm Gladys, and today we're going to discussing something that very multinational company is dealing with right now, which is ISG reporting and international CSR.
Oh, okay. Before we're getting into the discussion, I would like to introduce you what is ESG. So, ESG is stand for Environmental Social Governance. A few years ago, it's mostly optional and considered nice to have. But right now, it's mandatory in dozens of countries. And honestly, many people are not realize how quickly it shifts from it to be happen.
Yeah, and also that brings us to the key question today, which is is ISG actually changing how companies behave, or is it just better public relation?
Okay, so I'll be honest, I was quickly skeptical at first. A lot of ESG report look like marketing brochures, but after looking deeper into regulatory side, I realized that it is becoming serious. Accounting infrastructure is just not only storytelling.
Exactly, Chipa, and that's the angle we want to explore. ISG is no longer separate from financial reporting, and also the regulators are integrating it into the same system that governs financial statement with the same standards and setters, and also assurance requirement.
Okay, here's our roadmap. We'll start with the theories and then the regulations behind ESGs, then move into the real world data or case. We see in the positive and negative side. After that, we'll critically evaluate whether it's truly effective, and finally, we'll provide with the recommendations.
Okay, let's get started.
Okay, let's start with the basic. ESG has three pillars. Environmentals refers to emissions, climate risk, and resource use. Social covers with the labor practices, human rights, and community impact. Governance include board structures, executive compensation, and anti-corruption control.
And also in the traditionally, accounting only focus on the financial side of the business, income statement, balance sheets, and also cash flows. And also, ISC reporting focuses on on the non-financial side.
Okay, and that makes sense when you think about it. In non-financial information is increasingly considered just a material to long-term value as quarterly earnings. Companies may look financially strong, but still carry significant supply chains that are not visible in financial statement.
And so, who's actually setting the rules? The settings rules is the main body is the ISSB, which is the International Sustainability Standard Boards. It is operates under the IFRS Foundation, and the same organization responsible for global accounting standards in 2022. It's also issues IFRS S1 and IFRS S2 season 2.
Okay. And that's not only the framework out there. The GRI standards have been widely used in a voluntary basis for years. The TCFD focuses on the climate related financial risk. In Europe, the CSRD became a mandatory reporting in requirement in 2024.
And also, there's a emerging area that is often overlooked, Chipa, like sustainability assurance, which is essentially adult auditing ISC data.
Yeah, this is actually a big deal for our field, especially in late 2024. The IASB issued the ISSA 5000, the first global standard for auditing sustainability information. Is essential the sustainability equivalent of financial statement audit standard. It's become mandatory for periods starting in December 2026. And the countries like Australia and South Africa are already adopting it early.
So companies will eventually need their ISG numbers checked by an auditor, and the same way their financial statement are checked. That's the direction global accounting is heading. like a disclosure plus verification.
Okay, now let's talk the theory for a second because I think it is where it's get interesting. Why should the company even care about the about more than just a profit? What do you think about that, Gladys? There is just two theory there. First is stakeholder theory, says a business is responsible in everyone is affected, not just stakeholders, but employees, customers, and also the environment.
And also, legitimacy theory, Chipa, says like the companies need to operate within society expectations or risk losing their license to operate. And I actually think legitimacy theory explains the regulatory wave better, and the governments are basically codifying that what society already expect.
Right. So ESG reporting is companies essentially proving that they still deserve the license. It's not clarity, it is self preservation.
Okay, about the cases, let's look at the data because I think this is where the scale of this really hits home. PYC's 2025 survey found 86% of large companies globally now disclose some sustainability information.
That's just a huge jump where things were 5 years ago and it back by law now. Over 80 countries have ESG related laws with more than 2,000 individual regulations in force. On the accounting standard side, Australia, the UK, Japan, Singapore, Malaysia, and Philippines have all adopted or are actively rolling out the IFRS S1 and S2.
In Asia specifically, Taiwan has a 95% adoption of SASB standards among the least companies, and the TCFD adoption in the Americans jumped from 27% in 2022 to 35% in 2020. So this isn't just an European thing anymore.
Okay, so let's get into the actual cases because numbers only tell half of the story. Well, Volkswagen Dieselgate is the one everyone should know. In 2015, VW was caught installing software that to cheat emission test. They marketed clean diesel cars that actually for far more polluting in the road. It cost them over 35 billions in fines and recalls.
And what was interesting is that's a really a governance failure that became an environmental scandal, and the decision to cheat came from the inside leadership, not some rogue engineer.
Exactly. Now let's flip to the positive example because it's not all bad news. Unilever has tied with their sustainability progress index directly to executive pay, so leadership is finally accountable for ESG targets, not just publicly committed to them on the paper.
So that's a real governance integration. Compare that to companies that just publish a glossy sustainability report once a year and call it done.
And on the finance sector side, HSBC committed 100 billion to sustainable balancing by 2025, and it's actually generated close to 1 billion in sustainable finance income in 2024. So this shows that ESGs can be commercially profitable, not just a cost center.
So that's the counter argument to anyone who says ISG is purely a compliance burden, but the greenwashing is still a major problem industry wide, and I don't want to the glossy over that.
Definitely not. In 2025, the total of the greenwashing cases dipped slightly for the first time in 6 years, but severely actually increased. The bank sector alone shows a 70% of jump in greenwashing cases and 38% of companies flagged in 2022 until 2023 reappear and repeat offenders in 2024.
Which is pushing some companies toward the opposite problem, greenwashing, where they undercommit their sustainability work specifically to avoid scrutiny or litigation.
Right, and that's almost worse in way because now investors have less transparency, not more. And then there's no zero, not net zero pledges. About 6,000 companies globally have made a net zero's commitment, covering roughly of 92% of global GDP. And sounds impressive, but quality varies enormously.
Microsoft also has a detailed science-based transition plan, and a lot of the other companies have just made a pledge with no real roadmap behind it. The gap is exactly why assurance standards like ISSA 5,000 meters going forward.
Okay, and maybe because we already showing you the cases, we'll maybe critical. We'll maybe give some critics or evaluation through that. So, because their real pushback against ESG, not just a praise. In US, critics argue that ESG is ideology driven and adds compliance costs with a clear financial benefit. The SEC climate disclosure rules have stayed unsettled for years.
And also, I think that the criticism is partly fair or partly not, and the risk isn't ISD itself. It's ISD become a checkbook exercise, and also the companies disclosing just to satisfy regulation without actually changing behavior. That's where the credibility crisis comes from.
So the differentiator is really whether ESG is treated as strategically or paperwork. Unilever's and SHBC treat it as a strategy. It's tied to incentive and revenue. The company that treat it a paperwork are the ones ending up in the greenwashing headlines. Mhm.
What about the emerging market too? Somewhere like Indonesia, capacity is still developing and data infrastructure, technical expertise, smaller company budgets.
But the direction is clear and positive. The Philippines adopt ASSB aligned the standard in 2020, December 2025. And in Indonesia, OJK has been steadily expanding mandatory sustainability reporting for public companies. And these research actually back this up. Countries with a consistent regulatory pressures show measurably better ESG disclosure quality over time than those without it.
So the framework works even where institutions are still catching up. It's just it takes time.
So let's bring this together. The three takeaways from today is first, ESG has shifted from the optional of to essential, with the global accounting bodies like ISSB now setting common ground rules across borders.
And the second one, greenwashing and weak data are still the biggest credibility risk. We saw that the Volkswagen, and we still see it today in the banking sector.
And the third, verifications is becoming the missing piece and it is finally arriving. ISSA 5000 means ESG disclosure will soon be audited in the same way financial statements are.
So our recommendation, policymakers should keep converging standard and support emerging markets and building capacity. Companies also should treat the ISC as strategy and the way Unilever and HSBC do not just as a report.
And investors should demand verified data, not just pledges. And honestly, that's the core message of today's episode. So, disclosure without verification is just a storytelling.
So thanks for watching this video on ISG reporting and international GSR. And remember, sustainability starts with accountability. So see you next time.